Good afternoon. Is it the afternoon? It is the afternoon. It's a Monday afternoon, and hopefully you had a good trading day. Today's recap. Here we are, right back near 2,400, just like that, as if they just erased all of last Wednesday. So, when you're a trader, you have to learn how to look for clues and also learn what things mean. Meaning, if you ever heard the term retracement rules, okay, the way you measure the validity and strength of a candlestick is by the type of retracement that happens thereafter it. So you get a 374-point down move in the Dow, or you get 35 handles, to the downside. You do get some kind of bounce, like you had on Thursday or Friday. But if the sellers want to stay in control, usually, they don't let it bounce more than a third. If you come down, you bounce up a third. You start rolling back down. All of a sudden, that keeps the sellers in control that had the market, underneath their foot last Wednesday. If all of a sudden you bounce back more than a third, you come up a half, it's like, oh, look, buyers actually had some strength. There was appetite down there. Then if all of a sudden you start taking back more than a half and you do the 6.12% retracement, it pretty much negates the power of that move. And what it does is it traps some shorts, and it also probably gets a little, people a little upset if they bought in the hole on Thursday, Friday, selling too early, not thinking that we'd come all the way back up, a little upset of the great pricing they had. So that's actually how a pain trade develops. But anyway, you go to the chart of the S&P cash. So here's the thing. This broke last Wednesday, okay? And we did come up, and we're still on the right side of that trend. But if the sellers really wanted to reject price and we were that feeble, it would never have really gotten back above this like 2378. So you take a closer look here, basically, the snapback was definitely more potent than the bears would have liked, and you had a few clues on how to navigate it. So I know I was pretty long during this whole process. I got stopped out that Wednesday, because who knows, a big bar like this sometimes leads to another one or another one. Instead, it made a quick little pivot below 2356 to 2352, and then did what? A red dog reversal. So yes, I was buying the spiders on Thursday, thinking, hey, why don't we get a reflex move back up to maybe test this 2378 to 2382 area, and that's what I call the easy trade, right, from here to there. And then that's when you have a little bit of a push-pull between the bulls and the bears. So what happened? It actually pushed through, okay, and came back in. So I said, you know what, let's keep everyone guessing a little bit, okay, because you probably squeezed some people that started shorting a little early halfway through this wide range bar, maybe squeezed a few people, when it took out Thursday's high, and then all of a sudden, this was the spot where they're like, okay, I hope that was the top, and now this happened. So here we are, real close to 2,400 again, but this time, during this process, I feel like a lot of traders were, long, they were positioning themselves for a trade above 2,400, but because of this, guys like me that were carrying 7, 8 positions probably got out. Guys who were looking for the correction move might have got short here or here. So now there are less people long that might need to get long again, and there are probably some more shorts caught. So we'll see what kind of dynamic that creates. We'll see, we're back above all the moving averages again. And now I guess, you can't get too bearish if you hold above this 2386 for a session or so, and then all of a sudden, who knows if we're back at those highs. The IWM came back above, not really above it, but pressing back into that, 137 area. So at this point, it's 3 up days. If you got long with the red dog reversal right here, okay, because it was calculated at 134.75 and you're still long, great trade. You have a big break like this below an intermediate area. Sometimes you go all the way down to more macro area. Sometimes you go to the 200-day. But in order to do that, you have to get below a low and stay below it. Did it do that on Thursday? No. Got below it, got some more people short, got some more people out, reclaimed it, and that's why we love the red dog reversal, because you could buy with the stop after price discovery, and now here we are, right back up into the range. So not saying we're going to go back to highs here on the small caps, but this choppy, monotonous trend with a bunch of overthrows is still in this channel, okay? The XLF was weaker all day, it didn't fall apart also. This too, it broke, it held this bigger support, okay, after breaking an intermediate support. So here we are right back into it. Not saying it's going to break above this new descending channel here. It's still below the 50-day, but didn't fall apart. On this potent down day, you could have had a gap down. You could have went to the 200-day. It didn't. Doesn't mean it doesn't happen on the Fed Minutes Wednesday or next week when Trump's back from his overseas trip, but it means for now, you got to use your pivots. Unless you're just saying, I'm accumulating a short into this because I know this is the right shoulder of a Head and Shoulders top pattern. I know that Fed minutes are going to be dovish, not hawkish, and I know, but no one knows crap. What did I say? No, did I say that? Anyway, at this point, all you know is that this is holding still. Here's your descending trend line that's been in control, and maybe we're back to another inflection point. The Qs also have been very strong, giving you some clues that, first of all, this descending or this accelerated trend line did not break, so it showed you relative strength. The Qs did not get down to the 50-day. They only went to the 21-day. And now here you are almost right back to highs. So the Qs did not fall apart. This engulfing bar, which was very engulfing, okay, it didn't get 2 days, 3 days, 4 days. It had 1 day, and then all of a sudden did a red dog reversal, went below 135.87, went down by, what was this? How many events did it go? Let's see, what was this low? This low was 136.05, 135.87. So 15, 20 cents it made a new low buy. So anyway, here you are back up, showing strength. So definitely gave more pushback to the bears. If this was going to be weak, using your retracement rules, you know what? It could have bounced probably back to like here, and then it would have rolled down. Instead, it penetrated through. That's how you figure out kind of what's next. Things are still looking pretty good across the board. Apple, I showed you guys the wedge, still in it. Okay, still looks good, still held above the 21-day. The question is, does it go back to highs? Maybe. Okay, still best in breed. Amazon, closed at a closing high, on the road to 1,000. If this was going to be weak, it should never have let the the bulls reclaim this 954 area. Instead, the next day on, Thursday, it already took back the down day. So right there, that said, okay, Amazon is still a go-to stock, and it still could make its way towards 1,000, and high beta tech is still where it's at. It didn't even get to the 21-day. Google also did not even get to the 21-day, and it looks like it's ready to, just break out above this spot. 21 days down there. Okay, Facebook's been out of play, very tight. It's getting, this too, put it on the radar. This could get a nice little setup here. If this could maybe go inside for one more day or so, okay, and hold above this spot, chances are it might be able to clear that for a good setup. We were talking about buying the 50-day on that Thursday. Look at that nice wide range bar negating Wednesday, and now it's holding higher with some commitments. So we'll see if that continues to go. You had a big move by the optic group, this AAOI, boom, new all-time high. A lot of guys were trading it. It also woke up the other optics players. Okay, our old favorite, which is a broken name, which I did buy back a little bit today. Big wide range bar. I'm not going to put the volume in. We've seen this before, but seems like maybe you get another day or so. Who knows? Maybe it gets up to the 200-day even. It's like 51% short. I think it's worth a try. We've seen it before. Little days up, then fell, but this is pretty potent day. Some guys actually went with FNSR, which is also a pretty strong day. Look at that. It's gap up, trying to take back the moving averages. It is a broken name, though. This is not where the big money's been made. This maybe gets a little catch-up. The big money for guys in funds who've been accumulating a new name after coming public. This is how you get wealth, or you find big winners. New names that are above that trend and continue. And there you are. Congratulations if you're still in there, and if you're trading it, congratulations. The Chinese names have been really good too. Baba is holding really well after earnings. You had this big move lower that got reclaimed after earnings, and now it's holding above this pivot. I think with time this gets taken out. Been talking about how Baba is going to get above 120 since here. So hopefully it's just sitting in your IRA, and chances are it could continue. And if they get a MSCI listing, it's should be off to the races again. Baidu also cleared the spot from the morning call. It's looking better. It's now above this 188 area. So if you're trading a long trade versus that, I think it has a clear path towards 200 plus. Then you have the really strong names from 2-3 weeks ago. We put this on the radar, guys. 2 weeks ago, I listed this in my note right here to be a buy. Had a pre-earnings run, and now look at it. Same thing with sign-up. We did a pre-earnings buy pivot. Okay, that was right here. strong group, strong sector, boom. Okay, I remember JD over 3 months ago, I think we had it on this wedge pattern saying if you want to buy it for, for your long-term account or just put it on your trading plan, well, that was here when it broke this descending trend line here, and now look at it. So there's lots of things out there, lots of stocks on the move. You just got to pick and choose which sector you want to play and how you want to play it. I like to look for multiple longs that are showing relative strength, that are trading with patterns. I'm not just looking for crashes and big down moves, but when you get a day like Wednesday, yes, I pull it back and I figure out what's next after a little bit of price discovery, and that's what we had on Thursday. Okay, a lot of guys like me bought on Thursday, probably sold into Friday thinking maybe that's the easy bounce. Now we have to wait and see, and then today things kind of continued. And they might continue through into Memorial Day or the day before, because now I don't think Comey's testifying until after Memorial Day. Trump's on a trip, overseas. Looked pretty good with Israel. Thank goodness he's a supporter of that. But I won't get into that. And just look for these individual stock setups and try and stay with just the best of the best names that have all proven to take back that Wednesday and then some. I'll leave you lastly with NVIDIA. This too, look, we talk about relative strength. Well, oh my God, look at that chart. NVIDIA did not even get to the 21-day like Amazon and like Google. It went to the 8-day, and oh, look at that. What's that, a red dog reversal around the 127.55 pivot? If you bought that, you're now at a new high. You had price discovery. It proved to keep the momentum. Okay, that's that. I'll see you at the Morning Call Express. Have a great night.